Welcome back to this week's episode of Unfiltered, the podcast where we make international relations make sense. Today, we have a very special guest with us, Professor Layna Mosley. Now, Professor, would you mind starting off by giving us a small introduction about yourself?
Sure. I'm Layna Mosley. I'm a professor of politics and international affairs at Princeton University, and I research and teach about the politics of the global economy.
Okay, so now just to start off with the easy question, what kind of first drew you into studying international political economy and specifically like the politics of sovereign finance? And were there any particular experiences or questions that made you really want to pursue this area?
Well, I was in graduate school in the 1990s, and it was a time when there was a lot of debate about kind of increasing economic globalization and financial liberalization specifically, and what that meant for the ability of governments to do the kinds of things they want to do. So, for instance, to spend money on social policies, right? And so there was a big debate that was happening about the extent to which governments kind of retained autonomy from financial markets, right? Like they needed markets to borrow money, right? But they also then wanted to do things that sometimes the markets didn't like. So being sort of in some graduate courses where there was a kind of debate about the consequences of globalization for government policy was kind of what got me into thinking, well, what is it that investors really think about when they're making decisions?
Okay, and for listeners who may not be entirely familiar with the concept of sovereign finance, how would you explain what it was and why should ordinary people care about it?
Right. So sovereign finance is really government finance. And so, obviously, you could think about national governments as well as kind of subnational state and local governments borrowing money. So the sovereign piece is usually focused on what national governments do, but nearly every government worldwide borrows money. They borrow money because they want to spend more than they bring in tax revenue, or they borrow money because when times are good, they're able to bring in more revenue, but when times are tight, they don't, so they're trying to smooth consumption. They borrow money for monetary policy reasons, but it's a pretty kind of universal behavior across governments of wealthy countries and poor countries. And governments borrow money in a lot of different ways. They might borrow from other governments. They might borrow by issuing bonds in private markets. They might borrow from the World Bank. And so it's kind of all under that umbrella of sovereign finance. But I always say to people that you should be interested in sovereign finance because it's really fundamental to what governments do, because governments don't borrow money simply for the sake of borrowing. They borrow money because they want to spend it on something, right? It's the means to some kind of end, whether it is building a new road or sort of paying pensions or anything in between, right? But it always has a kind of purpose that's related to it.
And in your book, Global Capital and National Governments, you argue that international financial markets don't constrain every government in the same way. Looking back at that today, do you think that argument has stood the test of time and has, over the past 2 decades, changed or strengthened your perspective?
Well, thank you for reading my what is now an old book. So this was really, as I was mentioning, kind of came out of thinking about these debates that were happening in the 1990s, and a lot of the interviews that I did for the book were done in 1997, 1998, kind of around there. And then obviously a lot of the statistical analyses kind of goes up into the late 1990s, right? And so it's been a long time. As you say, the kind of the core argument in some ways is that the pressures that financial markets, and here I was thinking really about kind of private capital markets, the pressures they put on governments vary because they worry about governments defaulting on their debt. They don't worry about this very much for kind of wealthy, long-standing democracies. They may worry about it quite a lot more for so-called frontier or emerging markets that have lower incomes per capita, maybe that have more recently democratized. I think that idea that you get kind of variation in how governments are treated by markets as a function of partly their level of development, but also their kind of past histories. I think that has kind of held up. That being said, if you were to kind of fast forward just maybe less than a decade after the book was written, and you think about the sovereign debt crisis in countries in Southern Europe, especially in Greece, but also Italy and Portugal and Spain. You certainly saw a situation there where investors got really worried about default risk in a set of relatively wealthy countries, and you saw a situation in which there was in fact default in Greece, and where investors had sort of been maybe a little less concerned than they should have been about the possibility of default, right? And part of what was going on there was that the government of Greece was not being entirely forthcoming about its statistics, right? So on the one hand, I think in general we see this kind of difference in how countries are treated, but it doesn't always hold. And the other thing I would say is that it does also, I think there's also variation that's not only about kind of the relative kind of reputation or the relative income of the borrower. There's also a lot of variation that just kind of comes over time. So one of the things I've thought about a lot in more recent years is that when there's a lot more kind of enthusiasm and a lot more liquidity in capital markets, investors tend to worry less about risk for all kinds of countries. And on the other hand, when you've just had a crisis or you've got sort of a general tightening of capital liquidity, then you get sort of more discernment and more worry. So that it's not just kind of variation across types of countries at any point in time, it's also kind of variation over the kind of economic cycle. So you could have you could kind of look the same as a borrowing government and get treated quite differently depending kind of where the world is in that kind of global capital flow cycle.
That's really interesting to hear. Now, moving on, throughout your work, were there any findings that genuinely surprised or challenged one of your earlier assumptions on global economy or just in general?
Well, I mean, I think that we often sort of start thinking about something in one way, right? And then you do research and you find things are different. I think one of the things that just maybe it's more of a shift over time, but um, I think when I started thinking about this, there was a sense that especially for countries in the global South, um, it was kind of governments were really a little bit at the mercy of financial markets, right? So governments were capital poor. They needed to do what they needed to do to try to attract investment. That might have meant that they were kind of willing to change their policies, and they didn't necessarily view themselves as having a lot of options, right? And I think now, I think that, I mean, again, this is maybe partly some shifts we've seen in the world. I think that now, for a lot of countries, we can think about those governments having a significant amount of agency, right? That is to say, you've got a sort of menu of choices, right? You want to go finance your infrastructure project. You might go to the World Bank. You might try to borrow money in private markets, but you might also go to China, or you might go to Saudi, right? And so this idea, right, that there are kind of there are choices and there are agency, and now especially we see a lot of countries in the global South have decided to borrow in domestic markets as well, right? So this idea that you have this kind of like the kind of less well endowed with capital countries that kind of have to they're kind of desperate to attract capital. They don't have much autonomy. I think that's not necessarily the case, right? Again, it varies a lot, right? But I think sort of thinking a lot more. So a lot of my more recent work has tried to think about, well, how do the different kinds of political institutions inside countries affect the choices they make? And that assumes, of course, that they get to make choices.
Okay, and finally, just to sum it all up, for students who are interested in international political economy or global finance but aren't exactly sure where to begin, do you have any advice for them? Are there any books, habits, or just ways of thinking that help shape your own career?
Yeah, well, I guess one thing I would say is that I think sometimes people are intimidated at thinking about, well, maybe all international economic issues, but maybe even finance more than trade, because it seems highly technical, right? And obviously, if you are, I don't know, trading currencies in a very sort of complicated way, you want to know the technical stuff, right? But I think that to study the politics of the global economy in general, you have to know some things, right? But it's not like you can figure it out, right? Which is to say, getting a kind of sense of how trade works or what capital markets look like, right, is something that one can get up to speed on. I think that it's quite useful just to kind of get into the habit, as you mentioned, habits of reading the financial press. So, for instance, reading the Financial Times, right, which turns out to not only be about finance, right? A lot of what's in the Financial Times is actually about sort of politics, and a lot of people would argue that their kind of coverage of the international economy and the politics around it's kind of the best source out there. Other people like to read The Economist, but sort of start developing this habit of kind of reading these places, and then to the extent that you come across things that are unfamiliar, just looking these things up, right? It's actually become, in some ways, right, it's easier now than it was a couple of decades ago because we have sort of so much available, right, in terms of information. And I would also say that, the international financial institutions, like for all the criticisms of them, I think one of the nice things that the International Monetary Fund and the World Bank do is to put out these kind of very regular annual reports, right? And so if you go and read, just the IMF's World Economic Outlook, which comes out twice a year, it's going to be full of a lot of technical jargon. But when you read the executive summary, you kind of get a good sense of kind of what the big patterns are and what the things that you should be paying attention to are. Or the World Bank's World Development Report, I think, also kind of does a nice job of this. The other thing I would say is that there are some great podcasts that are out there, other podcasts than yours, that are out there for doing this. And so for people who really care about sovereign debt, there's one called Clauses and Controversies, which has been going on for, I don't know, a couple hundred episodes, which is run by a couple of lawyers who study sovereign debt, but they get a whole range of guests on there. The chair in sovereign debt at Sciences Po in Paris runs a sovereign debt podcast, and it hasn't been around for as long, but it's also good at getting up to speed. And then if you're interested more in trade, I think that the Trade Talks podcast that Chad Bown and Sumaya Kane started is really great, right? And again, it's like got a long history. You don't have to listen to all 200 episodes, but you can sort of figure out what might be most interesting to you, right? There's a great one that in the Trade Talks podcast about the history of the global trading system, which kind of then gives you a nice kind of up to speed about where we are today.
I especially like the point where you said about looking up, because that's actually how I came to learn of your book and your research. So I just thought that was like a really cool full circle moment kind of thing.
Oh, good.
Yeah. But
I was going to ask you how you found it. Yeah.
Yeah. But again, thank you so much for joining me for an interview. I'm sure your life is very busy, so I'm just so grateful that you took time out of your schedule to come speak with me. Well, that's it for today's episode. Thank you so much for listening to our interview, and if you liked this episode, make sure to follow our podcast and stay tuned for any upcoming ones. Thank you!